I honestly don't care what anybody else is saying on the internet. This is by far the most important factor for Bitcoin's price, the economy, inflation, unemployment, pretty much what's going on in the United States with the world reserve currency right now is by far, I don't care about any other country, the most important factor. You need to pay attention, keep watching. Today we're talking about inflation, some information from the consumer price index, and unemployment macro conditions in Bitcoin's price in general. I'm going to go into the history of Bitcoin, show you some things that I came to a conclusion to. Let's move into the actual video content itself. I'm gonna make it very, very simple, clear, and concise so that you guys really understand. This is some complicated stuff when it comes to the economy. So if we come over here to the consumer price index, you can see that today they're releasing, depending on when you're watching this video, CPI data is scheduled to release July 13th, 2021. So basically, this is what people use to calculate the cost per goods in comparison to people's wages to see if people's savings are pretty much being diluted. It's a good way to calculate inflation. So you can see here that if we come back to last month's consumer price index information, you can see consumer price inflation as measured by the 12-month change, and the PCE price index moved up from 1.2%, which is normal at the end of last year, to 3.9% in May. Okay, that's absolutely ridiculous. The 12-month measure of inflation that excludes food and energy items, so called core inflation, was 3.4% in May, up from 1.4% of last year. That's a big jump. Now, a lot of people are freaking out because this new data is about to come out and it could be very bad news for the economy. Now, for Bitcoin's price, I'm going to show you some evidence and some charting of what's going on, and you can draw your own conclusion. But right now, Bitcoin's price is definitely dumping. We're having a big spike to the downside, and this could be the bottom for Bitcoin. I'm just going to be completely honest with you guys. I'll give you information why. As you can see here, they're estimating that it could be 4.8%. That's absolutely ridiculous. Just understand that if you have any money in the bank or any type of investment that's calculated in USD, you are being affected. And this is the number one reason why Bitcoin was invented in the first place. It's a hedge against monetary inflation. It's a hedge against the control these central banks and the Fed and pretty much their monopoly and control over the US dollar. This is how, they've been able to enslave people for years. Now, I'm not going to jump into that. If we look at Bitcoin's price, there's some very important conclusions that we can draw. Since the Black Swan event and the coronavirus pandemic, you can see right here, this was that day. Bitcoin went all the way down to 3,800. Now, I remember that day like it was yesterday because on that day, I purchased a ridiculous amount of Bitcoin. I knew that it was just way oversold. People were freaking out for whatever reason, and I bought a lot of Bitcoin. Now, that's obviously what the most predictable way to 10x your money. Bitcoin's looking at close to $30,000 right now. So that's a great price, to buy Bitcoin. But for you guys, let me show you something. Since that day, we've been trending up. This is on the daily. If you look at the weekly, it's kind of just screaming the same thing. We've been trending up until this point right here. So if we look at, for example, the DXY or the US currency dollar index, you can see that this is the exact same time period with the coronavirus pandemic of it's just starting and all the issues with the economy, right? And people realizing that in the stock market, you can see that this has been on a downtrend, which goes with our thesis of Bitcoin being a hedge against monetary inflation. This is basically the US dollar compared to the top five fiat currencies of the world. So it shows the power of the US dollar. And again, like I said, we've been on a downtrend. We've been on a downtrend since that day. Now, if we look at US 10-year treasury yields, this is also a great indicator of the economy because it shows when this is dropping, when the yield of a 10-year bond is dropping, this usually means that people are getting scared and they're buying bonds because if the yield's dropping, that means that the demand is decreasing. Now, if it's going up, that means that people are typically risk on or they are taking more risk and they're not buying 10-year bonds, right? The yield indicates how many people are buying it. So if the yield is going up, that means less people are buying it. If the yield is going down, that means more people are buying it. We've been on a downtrend and you can see that even before this big date that we had here, I kind of put an arrow to highlight it, people were buying and going safe. They're going safe mode. They were going safe mode and buying a whole bunch of 10-year bonds. We had the massive dip. And then since then, we have been in a risk on environment. People have been taking more risk. Look, not a lot of people have been buying 10-year bonds. Now, the reason why I'm saying that is because it's all pretty much lining up.